Hey guys, welcome back to the channel. This video today will be very important for you in 2026 because buying feels exciting, selling feels uncomfortable. And that single difference is why most people don't manage to actually make money in crypto even in massive bull markets, especially as I think 2026 will be a bullish year for crypto. Most people think that the hard part in crypto is finding the right coin, good projects. It's not. The hardest part is knowing when to let go. And today I want to explain why taking profits is psychologically harder than buying, why your brain works against you at market tops, and how to avoid round-tripping gains in this cycle. And if you've ever watched unrealized profits disappear, this will hit home. Buying is driven by possibility. When you buy crypto, you are buying a story. You are buying future gains, you're buying a better version of your life, a moment where you got in early. Buying is forward-looking. Your brain is imagining upside, not risk. Even fear-based buying, like fear of missing out, still feels active and empowering. You are doing something, and humans, we love action more than restraint. That's why pressing buy feels easier than pressing sell. Selling feels like you are giving something up. Selling is not about money. Selling feels like you're giving up future upside. It is also admitting that the move might continue upwards without you, accepting you never sell the exact top. When you sell, you immediately face a painful question. What if I'm wrong? What if it keeps going up? And that fear is much stronger than the fear of losing money. And this is called loss aversion. We feel missed opportunity more intensely than realized profit. I don't know if this has happened to you, if you experienced this, but if you try to analyze and journal your emotions every single day, you'll probably come to this conclusion as well. And profits don't feel real until they are gone. Here is something that you probably don't realize yet, but hopefully after hearing this and you think about it, you might even realize it. Unrealized gains don't feel like money. They feel like potential. And potential is intoxicating. When your portfolio is up, let's say 2x, it feels normal. When you see 3x, it feels deserved. When it goes to 5x, it feels inevitable. And your baseline shifts upward. You stop asking, should I take profits? And you start asking yourself, how much higher can this go? This is how greed disguises itself as logic. And you know, almost everyone in crypto, you might feel it's only you, but I can tell you it's literally everyone. We follow the exact same script. We see early gains, we feel confidence. This confidence later on turns into conviction. This conviction turns into overexposure. This overexposure goes to paralysis. You stop selling because everyone around you is so bullish. If you go on X, Twitter, everywhere it says this time is different. We're going to the moon. And pullbacks, they feel temporary. And every dip becomes one last shakeout before the next leg up. Until it isn't. And if you think about it, at market tops, volatile feels low. Price action feels very smooth. Bad news get ignored. Good news is amplified. Your brain extrapolates recent price action into the future, and this is called recency bias. The market feels safest right before it becomes dangerous. At bottoms, it's the opposite. Fear is literally everywhere. Confidence is gone. Selling feels logical. That's why most people sell low and they hold too long at the tops. Not because we are stupid, but because we are human beings, and what we are experiencing is purely human psychology that you need to master, and you can only master if you practice and if you analyze. If you just do things without thinking, without analyzing, without putting your mind into it to understand what is happening, what is driving certain decisions, you will never come to these conclusions. Even if I tell you now, it will just go past you like this, without you realizing what I'm talking about. But if you experience it, if you analyze your emotions, you will come to realize this, and then you'll become better at controlling it. And buying is planned. Selling is reactive most of the time. So most people plan their entries at support levels, at breakouts, or DCA dollar cost averaging strategies. Very few, though, plan their exits. Selling is usually it goes with the sentences, I will know when the time comes, I will feel it, I will sell when sentiment changes. But by the time this sentiment that you are waiting for changes, price has already changed. And markets turn before emotions do. That's why your profit taking must be mechanical. It must be structured, it must be planned as well. If your exit strategy depends on how you feel, you don't have a strategy. And profit taking works best when it's predefined, when it's boring, when it removes emotion. That's why professionals they scale out instead of selling everything. They sell into strength, not panic, and they reduce risk as volatility increases. And they don't aim for perfection, they aim for survival and consistency, which is what matters the most. And now I'll tell you some of the most dangerous phrases in crypto. You've probably heard of those many times. Maybe you're even one of those people who uses these phrases. And these phrases they destroy portfolios. I will sell later. This is just a pullback. It hasn't gone parabolic yet. I don't want to sell too early. So these are some of the most common phrases. No one ever went broke taking profits, but millions went broke waiting for more, waiting for a better moment to sell or to take profits, which never came. So when it comes to selling and profit taking, a much better way to think about it is that would be your mindset shift. You don't sell because you're bearish, you sell because risk has increased. As price goes up, upside shrinks, downside expands, volatility increases. Taking profits is not pessimism, it's risk management, and risk management is what separates traders from gamblers. Buying makes you feel smart, selling makes you feel uncertain. That's why selling is much harder. But bull markets don't end because people panic, they end because people refuse to let go. If you want to win this cycle and in 2026, make sure you plan your exits. Make sure that you respect risks and make sure that you take profits. You get paid because you don't get rich by being right. You get rich by locking it in. Now let me know in the comments what feels harder for you, buying or selling. Thank you so much for watching. I'll see you in the next video.